unlock some premium income secrets.
Let's do it.
Today, we're taking a deep dive into the Goldman Sachs S&P 500 Core Premium Income ETF.
GPIs.
Exactly, GPIX. We're on a mission to see if this ETF can really deliver those premium income streams everyone's after.
And we've got some intel straight from Goldman Sachs themselves to help us out. Plus, we'll be digging into the latest price and dividend data.
Buckle up. Goldman Sachs describes GPIX as seeking to provide current income while also maintaining prospects for capital appreciation.
Trying to do both at the same time sounds like a bit of a balancing act.
Right. It's like trying to juggle chainsaws while riding a unicycle. So Goldman Sachs lays out 3 key reasons why investors might want to take a closer look at GPIX.
Okay, I'm all ears. What's their first point?
Consistent monthly distributions.
Ah, now that's interesting. Most dividend-paying investments, they hit you up with that check every quarter, right?
Yeah, the old quarterly payout.
But with GPIX, you're getting that income stream monthly. That could be a game changer for some folks.
Totally. It's all about that cash flow, baby. All right, point number 2 from Goldman Sachs. Core equity exposure with lower volatility.
Hold on. How are they managing that? It's like saying you want to eat your cake and still have it.
Right. Tell me about it. So here's the deal. GPIX is built around the S&P 500 index.
Okay, so that's your core equity exposure.
You got it. But to try and smooth out the ride, they're using this strategy called selling covered call options.
Now that sounds a little like something you'd hear whispered in a dark alley on Wall Street.
Right. Break it down for us regular folks. What's the deal with these covered call options?
Imagine you've got this amazing winning lottery ticket, right?
Okay, I'm following so far.
And you're willing to sell someone the option to buy that ticket from you at a certain price by a certain date. They pay you a little something up front for the privilege of maybe buying your ticket later.
Let me guess. That little something up front is kind of like the income GPIX is generating.
You got it. But, and this is a big but, if your lottery ticket ends up being worth way more than what they agreed to pay,
You're going to be kicking yourself for selling it so soon.
Exactly.
So it's like a balancing act between that steady income stream and the potential for missing out on huge gains if the market takes off.
You hit the nail on the head.
Yeah.
And that leads us perfectly into reason number 3 from Goldman Sachs. They're calling GPIX a diversifying source of income.
Which, in plain English, means...
It's all about not putting all your eggs in one basket.
Makes sense. Now, all of that sounds great on paper, but let's see how GPIX is actually performing in the real world. We've got some data here.
Hit me with it.
On October 11th, 2024, GPIX closed at $49.19 per share, a pretty small gain of 0.47% for the day. But get this, after-hours trading told a bit of a different story.
Ooh, juicy. What happened?
The price jumped to $50 per share after the closing bell.
Wow, that's a significant jump, over 1.6% outside of regular trading. Someone's got their eye on this ETF. Makes you wonder what's going on behind the scenes. Could be investors reacting to some late-breaking news, maybe something about the company's GPIX holds, or even just some broader market trends influencing those after-hours trades. Who knows?
It's like a Wall Street mystery. All right, let's talk about those monthly dividends. We know GPIX pays them out like clockwork, but what's the payout looking like these days?
So the most recent monthly dividend was paid on October 8th, 2024. It came in at 0.3472 cents per share. Not bad, not bad.
Okay, so based on that dividend and the closing price of $49.19, we're looking at a monthly dividend yield of, do you have a calculator handy?
Let me crunch those numbers.
Yeah.
Just over 0.7% for the month.
Not too shabby. Of course, we've got to factor in those pesky expense ratios, too. And remember, folks, past performance...
is never a guarantee of future results.
Exactly. So we've got a feel for GPIX's goals and a glimpse of its recent performance. But now let's really dig into those details that make a difference for investors. Numbers are great.
Sure are, but they don't tell the whole story, do they?
Not even close. We need to look under the hood.
Exactly.
What's actually in this ETF? Are we talking blue chip companies, or are we rolling the dice on some riskier bets?
Yeah, what kind of companies are we talking about here? That's a great question, and unfortunately, we don't have access to a full list right now.
Bummer.
But that's always something we encourage you to look into, right? It's like you wouldn't buy a car without seeing what's under the hood, would you?
Never. And speaking of under the hood, we've got to unpack these covered call options a little bit more. Can you remind us how those work again?
Yeah, sure. Imagine us owning a share of, let's say, tech company X.
Okay, tech company X. Got it.
Now, when you sell a covered call auction, you're basically giving someone else the right to buy that share from you at a specific price. by a certain date.
And they pay a little fee for that, right?
Exactly. And that fee,
Yeah.
that's the income GPIX is collecting, like renting out your stock.
Ooh, like collecting rent. I like the sound of that. But what happens if that share price suddenly takes off like a rocket? Wouldn't GPIX miss out on those big gains if they promised to sell at a lower price?
That's the trade-off. They're sacrificing some potential gains for that steady income.
So it's all about finding that sweet spot, right? That balance.
Right. You've got it.
Now, we've talked a lot about this premium income concept, but I want to pause here for a sec. Why should listeners even care about this type of income? What makes it so special?
Well, in today's world, interest rates, they're like that friend who always forgets their wallet. Nowhere to be found.
And everything costs an arm and a leg.
Seriously. Finding reliable income from investments, it's more important than ever, wouldn't you say?
Especially if you need that income to, I don't know, maybe retire someday?
Or just make ends meet. That regular income stream, that can make a huge difference.
Huge.
And that's where GPIX, with its monthly distributions, with its focus on smoother sailing, well, it might just be the ticket.
If you're not looking for those risky high-growth investments, right?
You got it. It's about finding the right fit for your goals and your risk appetite.
Absolutely. But let's be real for a second here.
Please.
Every investment has risks, right? What about the potential downsides of GPIX?
Let's talk about those.
All right, so we've covered a lot of ground with GPRX, but like we were saying before, it's time to look at the flip side of the coin.
Right. Got to talk about the potential risks. Every investment has them.
Exactly. So what are the possible downsides of GPIX? What should investors be wary of?
Well, remember how GPIX's performance is tied to the S&P 500?
It's built around it, right?
Right. So if the overall market decides to take a nosedive, GPIX is going to feel the pull.
Ah, so it's not some magical shield against a market crash?
Not quite. More like you're on a bigger ship, might handle some rough seas, but a tsunami's a tsunami.
Makes sense. What else? Any other risks to keep in mind?
Well, those covered call options we talked about. They could be a bit of a mixed bag. Yeah, they bring in that nice income stream, but they also put a limit on how much you can profit if the market suddenly shoots up.
It's about finding that balance, right? Like you said earlier, steady income versus chasing those huge gains.
Exactly. Now, another thing to remember is those expense ratios. GPIX has them, just like any other ETF.
Those fees can sneak up on you if you're not careful.
Absolutely. It's like going to your favorite restaurant and suddenly there's a cover charge just to sit down.
And they hit you with it after you've already ordered. So as we wrap up our deep dive on GPIX, what's the key takeaway for listeners? What do they really need to remember?
I think the biggest thing is investing. It's personal. What works for your neighbor, your coworker, maybe even your spouse might not be right for you.
It's like trying to share shoes. Not going to work out for everyone.
Exactly. So do your research, know what you're getting into, make sure it fits with what you want to achieve.
Great advice. And on that note, we want to thank you for joining us on this deep dive into GPIX, and a huge thank you to our expert for breaking down all the details and sharing their insights.
My pleasure. Remember, knowledge is power.
Until next time, keep those investing questions coming. We'll be here to help guide you through.
Happy investing, everyone.
See you next time.